Let's look at payments in three buckets, right? Pay before, which means that you move money into a wallet and then pay from that. I mean, that business is pretty much dead. It was a story for a few years and it's moved on thanks to Pay Now, which is basically whatever money I have in my bank account, I have multiple ways to use that. I could go to, in the old days I used to go to an ATM, withdraw that money and use it. So you typically the use of debit cards used to be very strong, but today UPI is ubiquitous, and so therefore that is the Pay Now model. Yep. Where it has become, earlier I would, on a Saturday I would go to the ATM and withdraw 20,000 rupees being expenses for the week. Now I no longer do that. I mean, if I have to pay the dhobi guy 842 rupees, I just UPI him, he's happy, I'm happy, everybody is happy. And that's the beauty of digital payments, and we spoke about in the previous episode how that number is going up quite phenomenally. There are 10 transactions per every Indian per month at this stage, and it continues to grow. The last stage is what is called pay later. So I want to buy a TV, I don't have money in my account, I would either take a personal loan or use a credit card. So the credit card is a credit product, and the beauty of the credit card is what is called the four-party model. So there are four players in every transaction. There is the merchant, there is the customer, there is a acquiring bank. You go to a store and there's a POS machine there, and there's an issuing bank, the bank that has issued the credit card. It really doesn't matter whose credit card you have and whose machine you have.
Yep.
You just go to the merchant and you give him the card. You don't have to worry about, if you're holding an Axis Bank card, you don't have to worry about whether that card machine is an Axis Bank machine or not. The transaction will go through. Think about it like you are holding a Indigo ticket. You go to the airport and you find that there is an Air India plane which is leaving earlier. You can use the same ticket and go on to an Air India flight. That is what is called interoperability, and therefore that is what has helped us build the debit and credit card, and now the UPI ecosystem. To the point that you are making on credit cards, I think as we see consumption continue to grow and more consumers come into the digital fold, which means that it becomes easier for banks to better understand them and therefore underwrite them, I think it's inevitable that the credit card business that we currently have will continue to grow manifold. The form factors may change. I mean, today you continue to hold a piece of plastic in your wallet. Maybe that piece of plastic will go away and will get converted into a piece of software or an app on your mobile, and you can just tap and go everywhere. You're already seeing some form of that already. You see it quite a lot abroad, and I think it's just a question of time before the form factor changes in India as well. I think 3% penetration of credit cards is ridiculous. I mean, if you look at Brazil, it's closer to 25%. If you look at China, it is closer to 40%. So I think it's inevitable that this number will continue to grow. It's a bit of a chicken and egg situation. Earlier, what would I do with a credit card, because the number of POS terminals weren't enough. But now between the POS terminals and the UPI QR codes, you can pay pretty much everywhere digitally, and therefore you could pay by UPI or you could pay by UPI on credit card, which means that UPI transaction will either hit your credit card or will hit your bank account, and you could choose between the two. And I think that will also ensure that the acceptability of credit cards, etc., will continue to widen and go deeper and deeper into this country, into smaller and smaller merchants, and therefore the need for a pay later product, i.e. a credit card, I think will continue to grow.